Thank you, Ruben. This is Oliver Austria with this week's Mortgage Market Update, where you learn what's up and what's down with mortgages today. Interest rates on a 30-year fixed-rate home loan are at 6.25%. And for a jumbo loan, loans over $417,000 for a single-family home, those rates are between 6.875 and 7%. What we've been seeing over the past few weeks since the Fed cut is that the interest rates on a 30-year fixed home loan have actually remained steady, if not increased. Now, people are wondering, well, why did it increase? The Fed cut the interest rates. Well, the thing we have to understand is that the rates on a 30-year fixed-rate home loan or any long-term mortgage notes are not directly tied to Fed's activities. Those Fed activities are actually more seen in the short-term mortgage notes and your home equity lines. So you've got to remember that when you're seeing on the news or reading in the newspaper that the Federal Reserve is going to cut interest rates, it's not directly tied to your 30-year fixed-rate home loan rate. It has an after effect, because everything in this economy is affected by what the Fed does, but it's not directly tied to that Fed cut. Now, what we've been seeing over the past few weeks is that the stock market has been on an increase. They've been doing pretty well, whereas the bond markets and the mortgage-backed securities markets have actually been seeing a pullback. And the reason for that is because the stock markets and the bond markets have somewhat of an inverse effect. You see, when the stock markets are doing well, it's doing well because more money is being put into it, and some of that money, or a lot of that money, really is being taken away from the bond markets. And the bond markets, have the same effect as the mortgage-backed securities markets. So it's fixed income that we're talking about. Now, what happens when the mortgage-backed securities market sees a pullback is that we're potentially going to see an increase in our mortgage interest rates. So keep that in mind, that it does take a macro understanding of the economy in general, and not just little blurbs in the newspaper to get an understanding of where our home loan interest rates are going. So for next week, I plan on talking more about what the Fed plans to do over the next few months in terms of cutting interest rates, and how the real estate market in general is reacting to these Fed cuts. That's all for today. Thank you.